Welcome to Thoughts on Investing. This week we are diving headfirst into one of the wildest puzzles in the market, tech earnings. We saw some stocks absolutely soar on good news, but then we saw others get crushed for what looked like the exact same reason. It was a week that left a lot of people just scratching their heads. So let's unpack it and try to solve this thing together.
All right, before we get started, just the usual quick reminder. This is all for educational purposes. It is not financial advice. The market is a wild place, so please always do your own homework.
So here's our game plan for putting this puzzle together. We're going to start with a quick look at the tech earnings report, then we'll get into the easy stuff, the straightforward wins. After that, we'll tackle those really surprising sell-offs and the companies that were a total mixed bag. And finally, we'll zoom out and figure out what this week's market mood was all about. Earnings season is basically high-stakes theater for the stock market. And for big tech, the pressure is just immense. As we're about to see, the investors, the audience, they don't always react the way you think they would.
It's really that one moment where an entire quarter's worth of work gets boiled down to just a handful of numbers. And if you get them right, you're a hero. But if you miss, or heck, even if you just don't manage expectations perfectly, the market can be absolutely brutal. And this past week, it was a total masterclass in that drama.
Okay, let's start with the easy pieces of our puzzle. These are the moments where the story was simple, the logic was clear, and the market's reaction made perfect sense. These were the straightforward wins. First up, Roblox. And wow, they didn't just beat expectations, they absolutely blew them out of the water. Bookings, which is a super important number for them, shot up a massive 63%. Their daily active users, up nearly 70%. And that free cash flow number, it was just miles ahead of what anyone thought was possible.
So how did the market react to this incredible report? Well, exactly how you'd expect it to. The stock just rocketed up 22%. This was a textbook case. Amazing results, amazing response. A clear, straightforward win. Reddit pretty much followed the same playbook. They delivered a really solid beat on both revenue and on their earnings per share. This was mostly thanks to a super strong advertising business. And to top it all off, they guided for a strong first quarter.
And what do you know? The market loved it. They gave the stock a nice solid 5% bump. So that's 2 for 2. 2 great earnings reports, 2 stocks heading up. Seems pretty simple, right?
It leads you to a pretty logical conclusion. A big earnings beat always means the stock goes up, right? Well, this is where our puzzle starts to get a whole lot trickier. And now we get to the most confusing piece of the puzzle, what I'm calling the earnings paradox. This is where companies reported fantastic numbers and their stocks got absolutely hammered for it. It makes no sense on the surface.
Let's look at AMD. On paper, this was a fantastic quarter. They beat what analysts expected for earnings per share. They beat on revenue, bringing in over $10 billion. They even gave a solid forecast for the next quarter. Logically, this stock should have taken off.
But it didn't. Instead, the stock plummeted a staggering 14%. How does that even happen? The results were strong, but the reaction was brutal. What on earth was going on here?
Well, the general thinking is that this wasn't really about the earnings report itself, it was about the context. See, the stock had already had this massive run-up leading into the report, so investors basically used the good news as the perfect excuse to cash out and take their profits. It's a classic case of buy the rumor, sell the news. Palantir's story was just as wild. The results were incredible. 70% year-over-year revenue growth, an earnings beat, and a really strong outlook for 2026. This is the kind of report that should have had investors popping champagne. And for a minute there, it did. The stock jumped 7% right after the numbers came out. But then, the very next day, it plunged almost 12%, wiping out all those gains and then some. The problem? A growing worry that even with this amazing growth, the company's valuation, its price tag, was just getting way too high, especially in this red-hot AI sector. All right, now for the most complex pieces of the puzzle, the mixed bag. These are the companies where the story wasn't a simple win or a simple loss, but something a lot more complicated for investors to figure out.
Let's talk about Amazon. Their revenue was solid. Their cloud business, AWS, did well. But then they dropped this single jaw-dropping number, $200 billion. That's how much they plan to spend on capital expenditures in 2026, and it was way, way above what anyone was expecting. Investors saw that massive spending plan and got really nervous about future profits, and the stock dropped over 10%.
And then you have Tesla, which is maybe the ultimate mixed bag stock.
The bull case, the argument for the stock, isn't really about selling cars today anymore. It's about this future pivot into AI, robotics, and robotaxis. But the bear case, the argument against it, points to what's happening right now, weakening EV sales and really high spending. And that tension between the future story and today's reality has investors feeling very cautious.
And finally, we've got MicroStrategy, which is a really unique situation. To understand this stock, you almost have to completely ignore its actual business earnings. Think of it as a leveraged crypto proxy. That's just a fancy way of saying its stock price is basically tied directly to the price of Bitcoin. So when Bitcoin goes down, so does MicroStrategy, no matter what its own software business is doing.
So after going through all these different stories, the wins, the paradoxes, the mixed bags, what was the overall mood of the market this week? Let's put all these puzzle pieces together and finally see the big picture.
You know, the week really had a split personality. On one side, you had these simple, positive stories like Roblox and Reddit. But then you had the total paradox of AMD and Palantir, who were basically punished for delivering great news. And then you have Amazon and MicroStrategy, whose specific issues led to big drops. And of course, Tesla, which is stuck in this cautious wait-and-see mode. It really felt like a market being pulled in a bunch of different directions all at once.
So what's the big takeaway from all this? What's the solution to the puzzle? It's this: earnings are not just about the numbers on the page. This week proved, beyond a doubt, that the story a company tells about its future, how the stock has performed recently, and just the general mood of investors, all of that can matter just as much, if not more, than a simple earnings beat.
Hey, if this explainer helped you make some sense of the market's puzzle this week, do me a favor and hit that like button and subscribe for more. And drop a comment below. What was the most surprising earnings reaction you saw? Thanks for watching.